Corey, we're going to be waking up to a lot of Facebook analyst reports, presumably all across the board.
Well, perhaps. And you know, this has been a very interesting time since the Facebook IPO, to say the least. We may have done a few Facebook stories here on Bloomberg West and on every other show on Bloomberg TV. And there have been a lot of questions that a lot of investors have had without the help of analysts to sort it out. If you look at what's happened to the share price since the IPO, of course, it's a story that we know, which is that it came out of it with much excitement, and there's a picture of some of the hoopla that went on, but the stock reaction has been quite less than favorable, dipping and then slowly rebounding, but still down quite a bit from that initial trade, down 13%. And without any analysts to come explain it. Why? Because there have been 13 analysts, those closest to this deal, the underwriting firms, who have not been allowed to put out research. And there's the history of this is that there was a time when analysts would come out and pump up these stocks, not just support and explain what was going on, but really come out as promoters in these stocks. The SEC changed the rules so that they could no longer do that. There have to be a sort of a cooling off period after that IPO. But the result is a day like tomorrow where we might indeed see many analysts come out with their first opinions on the stock.
So, Corey, exactly how then does this process work?
Well, what's going to happen, these analysts who have done the work, and most of the analysts had already created models long before the company went public, are now going to share their thoughts on it. Now, while they are required to sign off and say that their thoughts are independent, what we know from history is that firms where the investment banks are part of the deal often have a much more positive say on the companies that they bring public, and those investment advisory that the analysts are making is used as part of the pitch when companies go out and pitch deals. Indeed, this is part of the Jobs Act recently passed, saying that analysts are actually being on the phone calling clients saying, we think you should buy shares of this IPO. So analysts are going to start to be a lot more involved in the process despite the abuses of the past. But we're going to see tomorrow 13 firms from anywhere from Morgan Stanley all the way down to Blaylock Robert Van, those 13 firms that helped underwrite this deal, possibly coming out with their investment opinions tomorrow.